Why would they ever invest in an emerging manager, a young person? Well, if you think about all the biggest companies in the world, most of them are started by these college students, people who are young, hungry, ambitious, don't really have anything to lose. They have the energy and the drive to try crazy things, and they're creative, and they haven't really been put into a box yet. So, and the other thing too is they'll say, you know what? Well, Warren Buffett makes the same analogy. Warren Buffett says, it was so much easier for me to make money early on because I was a jet ski compared to a cruise ship, where if I wanted to turn the boat around or turn right or turn left, it's so easy on a jet ski. But when you're a massive cruise ship and you want to turn around, I mean, that is just so hard.
Welcome to the Exceptional Companies Podcast, a podcast for purpose-led entrepreneurs looking to master the art of buying, selling, or optimizing small businesses. Your host, Chris Seegers, founder of Exceptional Companies and author of Selling Main Street, has over a decade of experience starting, buying, and leading successful businesses. He's here to guide you through the complex world of business transactions and growth. Each week, we dive deep with actionable insights, expert interviews, and real-world strategies to activate and equip you to live exceptionally and build exceptional businesses. Now, let's dive into today's episode. Here's your host, Chris Seegers.
I'm joined by an incredible guest today, Parker Samelson. Parker is just a tremendous human being. So he got into the storage facility side of things in the real estate industry. He's had a ton of success there. He's a really good thinker, which is why I wanted him on, because I think he's got a lot of wisdom to share. He's very intentional in life, business, and giving. And I went to a conference where Parker was a public speaker, and he is just amazing with weaving history into kind of relevant, new ideas in a way that would makes sense to a 15-year-old because there were some young folks, and to an 85-year-old because there were some older folks in the room. So Parker, welcome to the show, brother. Super excited to have you here.
Thanks, man. Honored to be here. And I love talking about business, entrepreneurship, investing, life, faith, all these things. So I'm excited to talk more.
That's awesome, man. We always start with the story. So tell us your story. However far back you want to go, however near you want to go, how you got into the business. Tell us about your family and maybe some of your travel, because you've had some incredible journeys and wisdom that came out of that.
Yeah, for sure. I grew up in Colorado Springs, went to Wheaton College. I studied business and Bible, which have been two main threads of my life, where I feel like those are big parts of who I am, kind of on the business, investing, entrepreneurship side, but also just grappling with the spiritual aspect of life and trying to live a meaningful life and kind of figure out how those two things fit together. So I worked with my dad for a bit in essentially like a family office setting, kind of does three things: real estate, commodities, and philanthropy. And so I was mostly helping him with real estate things, and he's still doing a variety of projects, mostly master plan community developments in Colorado. So I feel like I learned a lot from him, but we stopped working together a few years ago. And then I tried to just start on my own as a real estate investor and feel like I had learned some things from my dad. I met with a guy that I knew in town who owned a bunch of storage facilities, and he had developed them all himself. And of all the different types of real estate I had seen up to that point, I thought, okay, this could make a lot of sense. I feel like there's a lot of things about self-storage that clicked for me. So I put a deal together, and this was my first ever deal. So I was still pretty fresh out of college. So I basically had no money, no personal experience on entrepreneurship. So I found land, put it under contract, put the whole business plan together, put a whole model together, and just started pitching it. I just started smiling and dialing people and seeing if they wanted to partner with me. And everybody said no, except I found one group from Chicago that was a investment group that did alternative assets for families. And they kind of do out of the box niche stuff. And they'll also work with brand new fund managers or deal sponsors, emerging managers, essentially is what they'll call them. And I found a couple groups actually that focus primarily on emerging managers, which is cool. I've had a lot of friends say, hey, I couldn't get into this because I don't have family money. I don't have any connections. I don't know anybody. And I said, look, like my family or any of my family friends haven't invested in any of my deals. I got started with some of these groups out there that are looking for people like me and like that, who are young people who are young, hungry. And so why would they ever invest in an emerging manager, a young person? Well, if you think about all the biggest companies in the world, most of them are started by these college students, people who are young, hungry, ambitious, don't really have anything to lose. They have the energy and the drive to try crazy things, and they're creative, and they haven't really been put into a box yet. So, and the other thing too is they'll say, you know what? Well, Warren Buffett makes the same analogy. Warren Buffett says, it was so much easier for me to make money early on because I was a jet ski compared to a cruise ship, where if I wanted to turn the boat around or turn right or turn left, it's so easy on a jet ski. But when you're a massive cruise ship and you want to turn around, I mean, that is just so hard. And he said, the other reason it's harder, the more money you have too, is he says, all I care about is just buying good businesses at good prices. But he says now he has so much money that it's only worth his time to buy businesses that are over a certain number of hundreds of millions of dollars. So he'll say anything below that, there's probably tons of good opportunities down there, but it's just too small to be worth my time. So I kind of think I have this theory that there's this perfect sweet spot underneath where all the institutional investors are playing, because they'll say we don't do anything below that. So there's this whole space where there's all these small businesses that are moving around, but there's all these mass retirement of baby boomers who are these super hardworking dudes who run these small businesses that they want to sell them, but it's too small for private equity. And there's this massive amount of deal flow that's taking place. So all that to say, there's investors who have identified that and say, I would invest in a rising entrepreneur who can buy small, good opportunities that could outperform these big institutional funds. And so that's exactly what happened.
Let me ask you there on the capital, since this was your first deal, was it just like, hey, we'll take whatever we can? Or was there some interviewing on your end to say, this could be a good longer term fit for 2, 3, 5, 6, 7 deals?
Right. Yeah, no, that's perfect. Like even just a week or two ago, I sat down with somebody who wanted to get into self-storage facilities, and they said, I found good deals, but I don't know anybody that would invest. I don't have money. My family doesn't have money. I don't know any investors. And I told them, I was like, you should just do exactly what I did, which is this, to answer your question. They said, hey, look, we'll provide all the equity and we'll sign the bank loan and bring all the debt, but you have to give us 51% equity in the general partnership. And so for me, I thought, who cares? Because I'm still going to make 50% of all the money, and I'll have a lot less responsibility, actually, because if they're in control and they're in the driver's seat, then they're really the ones that are signing all the big liabilities and things. So it was a really killer deal where I got all this experience. I made some money, started to create a track record. And even though, I had to give up a chunk of the equity for it, but for me, it was just an invaluable experience just to get started.
And equity in a GP that's worth zero is worth zero. So, getting that first deal done and then kind of having it as be the launching pad. So what were some of the things that came out of that first deal? Because I think back to our first deal, which was 12 years ago, or maybe 13. And oh my gosh, it was a steep learning curve for us. And we made pretty much every mistake you possibly could. But what were some things that came out of that?
Oh my gosh, same deal. I feel like we learned so many things. So at that stage, we were still interested in development and just buying land and entitling it and building from scratch. We completely moved away from that after this experience for several reasons. One, the entitlement was just absolutely brutal. Even though we were zoned properly, it took a year to get approved.
What year was that, Parker? Was that during COVID or before or after?
We went under contract right before COVID. So then COVID happened in the middle of the contract period. Because of that, then the boat in the Suez Canal went sideways and blocked all the world shipping, and the cost of everything went up 20x and everything. We were planning to build the whole project using shipping containers. But then because of that and COVID and the factories in China shut down and all those things, the cost of shipping containers went up like 6x or whatever. And so our construction costs went up 6x. So we got the thing entitled, we got it approved, but then our costs had just fluctuated so much during the whole thing that it's because we do all these projections right when we start, but then it's just impossible to predict what's going to happen before we actually break ground on developing it. So we learned a couple things. One, we just switched to not doing development after that. We just switched to doing value add, where we would buy existing businesses and then add value in different ways rather than building from scratch. So that's one thing we moved away from and never did again after that project. we learned another cool exit option, because what we ended up doing was we realized, okay, this doesn't make sense to build this project anymore, but the cost of the land had appreciated too with mega inflation of everything. And so what we did is we sold it to an apartment complex developer who rezoned it and built a bunch of apartments on it and paid us like double for the land what we bought it for. So, I mean, it just taught us to be creative. And be another thing that I really feel like I learned too is I feel like early on I had this attitude where it's like, if I back off or give up or on anything, then it's just me losing. Whereas what's encouraged me is I'm a huge history nerd, and there's this concept in warfare called tactical retreat, where it's like sometimes it actually makes sense to retreat in certain scenarios, and that's actually the most strategic thing you could do. But people could say, oh, well, you're just being a sissy. No, this is actually by far the most smart thing we could do. And so that's how we viewed that. After we had gotten everything entitled and approved and we were ready to build, but construction costs went up 6x, we thought we could have made the mistake of the sunk cost fallacy and said, well, we've already spent all this time and money. We should just do it anyway. But instead, we were like, let's just be creative. Let's be open-minded. And what that really makes me think of too is I've talked to a bunch of other family office investors that are really active in the venture capital space. And what they've said over and over and over again is they've said, when somebody's pitching us on some new company, we honestly don't care what the idea is. It all just boils down to the founder, because he said there's these studies that have been done on like which ideas work and which ones don't. And what they realized was the companies that actually survived were the ones that pivoted the most amount of times. And so all that shows is the idea, who cares? It's all about who's running the thing and are they willing to change depending on the circumstances and the market and things like that. So that was a huge eye opener for me too.
I love that, man. And that's actually some counsel I give. So when people come to us on the buy side and they're like, what should I buy? And I'm kind of like, it doesn't matter. It really doesn't. You want to buy a business that has the right financial record, that you think has the upside, that's in industry growing, but there's thousands, right, of different ones. And if you are like, I only want to buy this type of business, you limit it so much. And there's some things that we won't buy, like we won't get into the marijuana industry. We don't buy liquor stores. There's some things that for us, not for any big reason. I mean, there's some moral things there that we haven't quite decided and worked through, but really it's just not a business I want to own or I'd be proud of owning. But otherwise, we're always open to anything. And we've also seen some industries that we love, like HVAC, get consolidated so fast that we're like, we don't want to pay the multiples that are being paid there. So let's go find somewhere else that private equity hasn't gotten too attracted to. So, and one of my mentors had an acronym ALA, Act, Learn, Adjust. That was just like, I think it's a military term, but it was always just like, hey, Chris, take a step forward and then learn and adjust, and never be set on, hey, we're going here. We think we're going here, but depending on, what changes in the market or whatever, just pivot. So I love that, man. So, all right. So you sell that land and then you're like, all right, we learned some things. Where'd you go next?
Okay. So after that, I said, hey, do you guys want to do another, that we got like a 20% IRR or something. So it was a fairly good project. So I asked them, hey, even though it didn't shake out like we intended, do you guys want to do another project? Because I'm interested in doing another one. And they said, sure, we'll do another one. But this time you get 25% instead of 49%. And so I thought, this probably isn't worth it. Again, try to just do it on my own. And I just was working on it. But I had a friend, one of my closest friends from high school, was back visiting for something. And we all went and played golf together. And he had just finished a 1-year real estate master's degree program and had accepted a job offer of a real estate investment group in Manhattan. And so he was about getting ready to move out there, but I told him about what I was doing. And he said, I'll quit my job and cancel my lease and move out here and work on this with you if you're interested. And so we did. We just kind of shook hands right there. So we decided to work together then. And we've been working together for about 5 years now. And it's gone really well. The most important thing is we just work together really well. And we trust each other and we enjoy working together, which I feel like that trifecta is really hard to find. So we feel super blessed after all this time and after all the things we've been through that we still feel that way is really
that's great.
Fantastic.
Yeah, I'm working on a second book called Buying Main Street, which is a primer for people that are like, hey, how do I buy a business? And it's real high level. And one of the segments is on partnerships. And I went through an exercise a couple years ago that was really useful. And it was basically like outline all of the really successful partnerships you've been in. And it could just be like your wife, your siblings, whatever, right? Like the people that have worked out really well. Why did it work out? What were the core values? Just kind of outline that, and then outline all the partnerships that were terrible, which I've had a few, and why did it not work out? And then basically merge those into your partnership litmus test that you run every potential partner through. And for us, it was very similar. Is like, they have to be high loyalty. They have to be high trust. They have to have a set of skills that I don't have. And they have to be really fun to work with. Like, I always think in 10-year increments. I'm like, if I want to work with this person for 10 years, they got to be a lot of fun to work with.
I feel like that is important. I just had a conversation with a friend about, he's thinking about proposing to his wife. And I honestly think there's overlap there, where my wife and I, we actually did pre-engagement counseling, which is kind of unorthodox. But I took the position where I feel like a lot of one aspect of American culture is oftentimes people might not pay as much attention to just the practical elements of marriage. And I think a partnership is similar, where it's like, oh, well, how do you feel about it? And it's trying to create the Disney experience, but it's like, well, let's fast forward 30 years from now. Let's talk about just the absolute core practical reasons that if you're going to merge all these aspects of your life, which a business partner kind of gets up to that level. And so I really try to take that seriously, for sure.
I love that, man, doing all the pre-work, because my wife and I, the reason we've been so successful is my wife is just incredible. And we met in business school and we started partnering up on every deal we did. And she brought a totally different skill set, but we just loved doing it. So initially when we bought our first business, we didn't have kids. I mean, we were working like every day, probably 12 hours a day, every single day. And it was fun because it was like, hey, we're working together, you know, like we're building these great things, we're doing these great projects. And then we started slowing it down as we had kids. But that initial alignment just continues to kind of read through our marriage and why it's fun to be married to her.
Totally. Yeah. And that just makes it so much more engaging and exciting to show up and try to do it. Because like the early stages of our company, my business partner was living in Denver and I was living in Colorado Springs, but his family belongs to this really nice golf course in Castle Rock. And so we would just meet halfway at this golf club. So we were essentially trying to build our business out of the really fancy locker room of this. We would work all day and then we would go play 9 holes and go do the hot tub and stuff. And I was like, this is so much fun. I mean, entrepreneurship is hard and scary and stuff. So it's like, you might as well make it fun.
Oh yeah, 100%. Yeah, that was one of the things as we started buying more businesses. I was like, I am not going to be gritting my teeth through the onboarding, through the optimization. Like, I'm going to go in there and try to maintain peace and some sort of balance. Now, some of it's a little out of balance for the first bit of it, but the first few we did, it was just like, we got to get through this part to get to the good part. And then I was like, man, if we continue to buy businesses, I would do that my whole life. Like, I'll just be gritting my teeth and grabbing the wheel. So, man, I love that. So, okay. So you guys partner up, you start doing deals. What happens next in the story?
Okay, so the next thing that happened, again, this is part of the pivot thing. So we were planning on just doing another traditional self-storage deal, but we had a broker who brought us a deal and said, hey, I know you guys have been struggling to find anything because self-storage is super competitive and there's not a lot of good deals on the market. So he brought us this deal that was a RV and boat storage facility for sale in Denver, which was at the time, even more so than it is now, was just a super niche asset class that nobody really talked about or was involved with. It was like a 7% cap rate, like pretty much like downtown Denver, 10 acres. And it made a lot of sense and our investors were excited about it. So we've kind of had a strategy where we only buy in counties that don't require a building permit to build new like modular self-storage units. So we can buy these RV and boat storage, and then we can add these modular units and rent them out as self-storage.
What does that look like for folks who aren't in the business? What does that modular storage look like? How do you set it up? How do you put it together? Do you have to put it on a concrete slab?
Right. So it's kind of like a shipping container, but we originally started trying to do shipping containers, but we switched. We use a third-party group called Boxwell. They manufacture them in Shenzhen in China, and then they float them all over to LA, and they rail them and truck them to wherever. And then they just arrive on a big pallet, and then a guy comes with a forklift and just sets them up and just puts them in place. And then, so we only work in counties that there's no permitting required. So, because if you did require permitting, then it would require a concrete slab and anchoring to the ground and a bunch of crazy stuff that would make it not make sense. Like that would be too expensive and complex. Shipping containers are a really weird gray area in the building code. Just generally, most counties adopt the universal building code. There's this code council that decides it, but the code is generally kind of silent on shipping containers. And so it's kind of up to like county by county to decide how they're going to interpret it. And so that's been an interesting journey that we've had to figure out. So we're like, wait a second, we can just buy this existing one and then just slowly add some of our modular storage strategy onto it. So we bought the RV storage facility. Before we even did the storage stuff, we realized we're like, wait a second, this whole business is so antiquated. They didn't have a website. Their rates, they hadn't raised we were like, why haven't you raised rates in 20 years? And they said, oh, well, to raise rates, we have to pull out all the paper leases and find their email address and individually email all 600 of our tenants. And it's an absolute nightmare. And they said, we didn't even feel like we need to do the rent raise because this was already paid off like 40 years ago in the family trust or whatever. And then we already had enough money. All we wanted was a ranch and a boat. That's all we wanted. And we kind of joked
it sound like oil and gas people. It's like, I need to sell these minerals and royalties to buy a bass boat.
Yeah, exactly. We've joked that every single time we've bought a storage facility from somebody, it's been like the same person every time. 65-year-old male, overalls, MAGA hat, revolver in the front pocket, like
my kind of people.
Chewing tobacco. Yeah, that's been another learning piece too, because I feel like a lot of people approach this saying, oh, well, I can't compete against all these massive hedge funds from New York, Blackstone, who are going to come in. I mean, the people who are buying these from, they would never sell to Blackstone. They would never sell to one of those groups because they're like, I don't want these out of towners coming in. Yeah. So the fact that we are local, I would walk in there and say, hey, I was born in Colorado. And then there's just instantly trust there and just look them in the eye, shake them in the hand. I mean, that kind of stuff, I feel like they don't really teach you that, but it's like that. We learned that could take us so much further than acting super professional and wearing a suit and all that stuff.
Yeah. Building that relationship. I mean, on the sell side for us, like if I tell people, hey, I'm from Westcliff, Colorado, they're like, oh, this guy's he's a small town guy, like okay, cool. I know Westcliff. I know what that is, et cetera. Okay. So Parker, we're talking about just building rapport with potential sellers and not being worried about overly polished, but just showing up and being a human being and building a relationship with that person. So
do you like what you hear so far? Make sure you never miss an episode by clicking the subscribe button now and check out our website, www.excoadvisors.com. This podcast is made possible by listeners like you. Thank you for your support. Now, back to the show.
All right, you guys, you get some great deals going, and then we'll have to fast forward a little bit to make sure we get it all. But you guys had some success, right? Yeah. But I want to tie into what was so attractive about you when I first met you is you're so focused on giving. And everything we do, we call ourselves capitalist missionaries. Everything we do is about giving and serving other people. Yeah. But in the entrepreneur space, sometimes you don't find that, especially with younger folks that haven't really realized that, which is, hey, we're all created to serve in some form or fashion. But walk me through a little bit about the success and then how you tied in your giving and your wife and the travel and just kind of some of that part of that story.
Right. Well, kind of full transparency. And I'm still trying to figure out how to integrate this into my life purpose and sense of self and things. But when people ask me, they're like, are you super passionate about storage? Is it your life mission? I'm like, no, storage is really boring. It's literally just leasing air to people.
I've never heard that before. That's awesome.
Yeah. So why do I do it? I do it because I almost view just the global financial system as just a big game. Like I grew up playing lacrosse and it's like, okay, here's the rules of the game. Here's what it looks like to win as opposed to lose, as opposed to do okay. And so for me, I'm like money doesn't feel like the end purpose for me. I just want to solve for that in my life so that I can focus more on other things. For example, what is really important to me? It's my faith. It's my family. Personally, I really value traveling and experiencing new cultures and experiences and things. I have a lot of friends who don't. I have a lot of friends who are like, dude, that sounds so boring and I'd rather just chill in my hometown forever. That's cool. But for me, I love learning different languages and trying new foods and getting involved with different missions organizations in other countries and going and visiting them and seeing how it all fits together in this global picture of. So anyways, off of that, like last year, I think we had 4 storage facilities that we still owned. They were maybe making 1.2 million a year in revenue or something like that. And then me and my friend were taking management fees. For a while, we managed it ourselves. Typically what we would do is every time we buy a new storage facility, we just answer the phones ourselves for like a month or two, just so we meet all the customers. We make sure the phone's getting answered. We understand the problems and what's actually happening with the place. And we realize, oh, a huge pain point is the gate. Everyone's so frustrated that the access ends at 9 p.m. Well, let's just extend it to 10:30 p.m. Stuff like that. Then we hand it over to property management, and then we can actually coach the property management well because we actually know the business. But at that point, we had handed all 4 of our facilities over to property management. And then it got to a point where we were kind of like, didn't have that much going on. So we were like, what do we do? So I was like, well, this seems like a unique opportunity in life. We don't have kids yet. So my wife and I just traveled around the world for 8 months, and we visited 40 different countries. And I climbed like 3 out of the 7 highest mountains on each continent and stuff like that. And we had the craziest, coolest experiences. And it was a really awesome bonding time for my wife and I, because you're with each other all day, every day.
Yeah, for sure.
So that's just one example. I mean, there's other things I'd love to get more involved in life. Like, for example, this is kind of a new thing, but I have a friend who's wanting to set up a new family office, and they're wanting to hire me to help them and kind of build out more of an alternative investment platform. But for me, I'm like, I want my business to be self-sustainable enough where I do still have margin to kind of do these other things. So
for sure.
That's really how, I mean, the vision for me is, I don't sit here and I say, oh, I want to own all the storage in the world. I mean, I don't really care. I kind of just want financial independence so that I can buy back my time and have more margin and flexibility in life to do the things that are really meaningful to me.
I love it, man. So tell me a little bit about your giving, because that's really important to us. And one of the strategies that we bring to our sellers is, hey, if you don't have a really good giving consultant, just like you have a financial advisor, an attorney, a CPA, us as your business advisor, you can save a ton of money on the tax side, just a lot of great structures. So talk a little bit about that.
Yeah, well, I know we were both at the National Christian Foundation Conference recently, and I'm personally a big fan of them because I do think there are a lot of benefits to a donor advised fund. And the time that I've spent in their ecosystem, they always try to remind me, they say, hey, don't forget, if you or anybody that you know are considering selling a business, talk to us beforehand, because if you can set it up to where you donate shares before the sale to a donor advised fund, then in this massive liquidation event, you can kind of still personally put a fairly similar amount of money in your spending pocket, but a ton of money that would have gone to the federal government just goes straight into your donor advised fund, tax deductible, that you can give to charity. So they'll say, talk to us unless your favorite ministry is the federal government.
Not any of us. Yeah. I don't think anybody ever, except employees of the federal government, maybe.
Yeah, exactly. We've tried to do all kinds of things like that. And I have a donor advised fund that it's such a good feeling having a good amount of money in our donor advised fund, because it just makes it so fun. Because then if we go to these ministry fundraising dinner things, it's like, I know we already have this money in there, and we can be generous, and we can kind of be spirit led with it and say, if something just pops out of nowhere and it's like, oh my gosh, this is such a crazy cool opportunity that could just leverage impact in this really crazy way. We don't have to be like, well, let's look at our budget and see if we can make it work. It's already in there. And so then we can just do it. And we try to get really creative with giving too. I mean, one thing I haven't done yet, but I want to get more into, is even just impact investing, impact-oriented business through a donor advised fund. I mean, how cool. I think there's so many innovations in this whole space that I think a lot of people don't know about that are really exciting.
Yeah, I agree. And we're even, as we think about raising our next fund to buy small businesses, we're going to create it to where it is an impact fund. It's still pretty fresh on what the scorecard would look like, what the metrics would look like outside of your typical profitability and performance metrics. So, but that's really exciting. And it's exciting what you can do within your giving sleeve that wasn't around even 5 years ago. So I think that's great, man. And I mean, I think the federal government's the worst fiduciary ever in the history of anywhere. So if you can get more of those dollars and put them in play in the marketplace or with folks that are doing good things, like, that's going to help the world for sure. So let's transition, and we'll close with a couple questions. So if you've got a young entrepreneur and they're thinking about either getting into real estate or starting a business or buying a business, what are some things you would have them think about? And then I want to close with just resources, books and different things that you're really into, and it could be non-business, but just stuff you're excited about.
Yeah, totally. One thing I try to help people think through if they're interested in going down this path is I would say, I tell people there's a reason why everybody doesn't do this. And the reason why is because the market kind of prices everything in. And so starting or scaling a business is really difficult and challenging, and it can be stressful and things like that. If it were super easy, it would be way more competitive, and it would change the market of the pricing and everything. So the fact that there's people who don't want to do it, that's all priced into the market. I do have some friends who I'm like, it kind of makes sense for you to not do this. For example, if I have a friend who's a medical doctor or an engineer, they have an engineering degree, or the government contracting job with unbelievable benefits where they can travel the world, and they have young kids and they're stressed about finances, but they say, wait, with this, I can pay off all my debt. I can do whatever. I say, yeah, that makes sense. And I would say, if you do start a business or buy one, you could just keep your job, because if you're getting paid every 2 weeks, that would really help you get a bank loan. So you could do some small business or something. And if it's something that you could do kind of on the side, I think real estate falls in that category. Then it's like, yeah, there's no reason why you couldn't do that. Yeah, I mean, there's been times in my small business career where it is really stressful. There's things that happen outside of your control. And there's a couple self-storage people that we follow online who, when all the interest rates were hiking up like crazy, they would say stuff publicly, but they would say, yeah, I've got $50 million of personally guaranteed loans at floating interest rates.
And a lot of those people got smoked, man.
And his next comment after that was, he was like, who still wants to get into real estate?
Warren Buffett talks about asymmetric risk, right?
Yeah.
Like, don't lose a dollar. That's what I tell people. I'm like, guys, the yes and philosophy. So yes, I want to buy a business and I want to keep my job. Or yes, I want to buy a business and I want to minimize my downside risk. The last business we bought, we put very little cash in, and it was 97% owner carried. And there was a very low personal guarantee that we already surpassed the first year.
Nice.
And those deals are out there. They're not easy to find, right? Like, it takes time and energy, but those deals are out there where it's like, hey, I'm going to take more time. I'm going to be more patient. I want to minimize my downside and have a lot of upside. And I agree. I think people like have just said, if you're young, just take a ton of risk. And it's like, that's not what the smart people are doing. That's not what Warren Buffett does. That's not what the people that have made money for a long time are doing.
Right.
They're protecting those dollars and then figuring out ways to make really smart bets. I love that, man. So what else? Any other advice you'd give to young entrepreneurs? And then what about some resources for folks, or resources that have helped you along your journey?
Yeah, just one other factor with small businesses is so a couple things. One is something I feel like I've learned just through experience of actually owning these companies is there's certain opportunities that can just sound so good on paper. But for me, it's thinking through just the day-to-day practicalities, similar to what our earlier conversation about marriage and business partnerships. It's thinking through the little details that are just going to be part of your life every day. So for me, it's like when I'm buying a business, I try to think through, how hard would it be to hire people to work in this job? Is it going to be impossible to staff this thing? Is it just going to be a total headache, nightmare? Because again, like, why am I buying these businesses? It's because I want to increase the quality of my life. And so again, if I'm buying something if I really try to think deeply about, would buying this business make my life better or worse? Would it make my life more or less stressful? I feel like I've seen people where they'll leave their job and leverage everything and basically like buy a job that's maybe lower paying and more stressful than the one they just left. And so I'm saying, like, why would you do that? You want to think through the subjective element of this, because when you're staring at Excel and just looking at the projections, it's easy to just get lost in the sauce of the numbers. But I try to encourage people. I'm like, dude, think about the subjective side of this. Think about how this is going to affect your marriage, your kids. Is it going to make your life more or less stressful? And then is it going to increase your quality of life or decrease your quality of life? That's another big thing I try to, because I do think there are businesses out there that do increase the quality of your life because of the nature of the stress versus risk versus this versus that. So yeah, that's a big one for me. And then as far as resources, one of my favorite books, this is more for a startup person than a buying a business person, but they call it the Silicon Valley Business Bible. It's called The Lean Startup.
Oh yeah, that's great.
Yep. Yeah, that's a good one. I personally love the podcast, How I Built This.
Yeah, that's really good.
Killer. And I did have a friend say, he's like, well, the only downside of that podcast is they all kind of blend together because they're all kind of the same story. It's like, I had this idea, I didn't have any money and I had this rich uncle who invested a little bit and then it got me started. And then it's like kind of the same story over and over again, which is cool because it's like, these weren't special people that were these like bionic superhumans. It's like, they're kind of just normal dudes. And that's kind of the theme of our podcast too, Ascendance, where it's like the next generation of those people. For example, like our first episode is this guy who's my age, who his dad started OtterBox. He's an episode on how I built this, but he grew up in a tiny town, kind of like a dead end town, super rural, middle of nowhere, taught himself all the trades, all of his friends, just like dead end situation. But he built OtterBox from scratch and it's a multi-billion-dollar business now. And I'm like, how freaking cool is that?
I actually met him right when they were getting that launched, and I pitched them on a jingle. I was trying to get them to do a jingle because I was playing in a band. So I like wrote a jingle for OtterBox and they didn't receive it. They didn't buy it. And then they took off and I'm like, dang it, if my jingle would have been on every commercial, I would have been a billionaire too.
Right, exactly. But yeah, I just think just those stories are so inspiring.
What about a non-business book or just a book that you've really loved reading in the past 6 months?
Yeah, I'm not normal in my reading approaches. People ask like, what kind of books do I like to read? My answer to that question is just like the classics. Because people will recommend to me like, oh, you should read this new fiction book that just came out a week ago. And I'm like, reading a book is a pretty big investment. That could be a lot of time. And I'm like, it's hard for me to invest in that much time if it hasn't been proven out and it hasn't. If like 5 years from now, people are still talking about it, then maybe I was like, okay. But for me, I'm like, what about the books that people have been talking about for like 2,000 years? You know what I mean? Like the Bible. There's just some books out there that have just changed the course of civilization. And there's some books that have been so influential that they change the way that we think about the world, even if we don't know that it is, because all the people that are influencing me were influenced by somebody who's influenced by somebody who read these books, who read those books, who read those books. And so it's like, it all goes back. That's why I love history so much, because it's just like the context for why the world is the way that it is. And I like want to understand why the world is the way that it is. Going back to that conversation of like, life kind of just feels like this big game sometimes. So it's like, well, I want to understand it really well. Like I know some of the best basketball players are the ones who just know the rules so cold that if it's like 30 seconds on the clock left, you know how many timeouts, it's like, they're able to just function so well within knowing the rules of the game that I'm like, that's what I want to be able to do too. I want to understand the world super well so that I can like function properly within it.
Yeah, we call that on our side, identifying the architecture of life.
Yeah.
And once you understand the architecture of life, then it becomes a lot easier.
Yeah.
And business has an architecture and good relationships have an architecture. God created this beautiful architecture. And when we see it and understand it, it makes things a lot easier. I love it, man. Thanks for coming on the show. Where can people find you?
So people can find me on LinkedIn. I'm fairly public on LinkedIn. Sometimes I go back and forth with how public I should be on LinkedIn. What I don't want to be is a LinkedIn lunatic, but I think I might already be one. So yeah, I'm on.
What about the podcast? You mentioned a podcast.
Yes. So we have a podcast called Ascendance, which is similar to How I Built This, but the next generation of young people, of family business families who are trying to ascend into their own identity and impact. And it's usually through some form of entrepreneurship or investing and giving. And then we wrote a book. It's a little bit more niche of a topic, just specifically on next gen people who are trying to discern their role in these multi-generational family office, family business structures. But I mean, I do think it's relevant for anybody because everybody has a family and everybody has a legacy of some sort. So that's called Becoming Ascendance. And we try to make it pretty short, so it's not some super bear of a read. We wrote that recently, and we are really proud of it. And that was a lot of fun to work on. So yeah, I would say those three.
I love it, man. Well, thanks so much for coming on the show, and we'll have to have you back again.
Awesome, man. Thanks for having me.
Appreciate it.
Thanks for joining us this week on the Exceptional Companies Podcast. Make sure to subscribe to the show on iTunes, Spotify, YouTube, or via RSS so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes, or if you'd simply tell a friend about the show, that would help us out too. If you liked this show, please reach out through our website, www.excoadvisors.com, for free tools to order a copy of Selling Main Street, or to sign up for our free webinar on how to sell your Main Street business.